Love being on here. Welcome everybody. Thanks for joining us. Today I wanted to share 3 of our strategies with you that have been working very, very well for us. It's going to be a jam-packed session. We're going to have to get through this very, very quickly. As Reed said, I'm Vince Vora. I'm the head trader here at Trading Winds, and I have been trading for the past 30 years. What you see here are just some of the trades that we've profiled for our members recently. We have several strategies that we've developed over the years that are now used not only by retail traders such as yourself, but also many hedge funds, and I'm going to share 3 of those with you today. We're going to start off, though, with my money management rules. I'm sure some of you have heard these before. They're worth repeating. A money management plan is really the core of any trading system, and so I wanted to share that with you quickly. Then I'm going to share with you my favorite trade setup along with our winning momentum strategy and our powerful Veracity system. Hopefully we will have plenty of time for some Q&A at the end. I did want to ask though, sorry, I'm fighting off a bit of a cough here. I'll try not to cough in the mic too often. How many of you have actually seen me present at an event or a webinar such as this before? If you could just take a second or two and type a yes or no into your chat box, I really appreciate that. Thank you very much. Okay, excellent. Thanks again. Well, a few people have not. Thanks for joining us for the first time. Appreciate it. Okay, we've got a lot to cover here. Please remember, trading can be risky. Don't trade with real money until you are completely comfortable with the system that you are using. So let's start off with our money management rules. Now, this market has been challenging. One of the ways that you can protect yourself is by following a strict set of rules. What we always do when we sit down to trade is make sure that we do have a clear mind and are feeling good. But the main reason for it is that trading is so much more about how you manage a position once you're in it than it is selecting that entry, and especially the amount of money that you put into that position. So if you're worried about the amount you have in there, you won't be able to manage it appropriately. So always make sure that the amount you trade with feels completely insignificant to you. One of the other ways we protect ourselves is to make sure that we never put more than 5% of our account balance in any one trade. That way, 5% is our absolute worst case scenario. Now, there are always things in the market that you cannot control. The perfect example would be a 9/11 type event. Hopefully we'll never see that type of event again, but it's something we can't control and have to be prepared for. So to do that, we always keep 50% of our account balance in reserve. That way, should such an event like that happen again, number one, our loss will be controllable, and secondly, we'll still have half of our account available to put back into the markets and make back those losses. Now, more important than ever these days, it is extremely important that you spread your trades out and are very selective. What you want to do is focus on the 1 or 2 highest trade probability setups that you can find for the time frame that you are trading. Okay, a couple of other very important rules we follow. Number 1, you'll never go broke taking profits. And as I go through these 3 strategies, you'll see just how significantly we limit our risk. So even taking small profits will make sure you do very well. But this is really geared towards those of you who are just starting out. And as you gain experience, you will learn how to remain in a trade a little longer each time. But until you get there, bank those profits when you do have them. And always do remember that trading is not about whether you yourself are right or wrong. That's important. But it's all about how much money you make when you're right versus how much money you lose when you're wrong. In other words, it's about execution. If you focus on execution, the rest will fall into place. Okay? So let's get to the strategies. And the first one that I'd like to share with you is my favorite trade setup. Let me bring up my charts. And this is a chart of the USD CAD pair. Now, it really doesn't matter whether you're trading Forex, futures, stocks, options. It really doesn't matter. All 3 of these strategies work on all instruments and all time frames as well. Now, they're all based on technical analysis, and what we really do to put the odds in our favor is trade with trend and momentum on our side. Now, what you're seeing here is a clean chart. The only indicator we have on, and I'll hover over it, as you can see, is the 20-period simple moving average. And we've tested this, traded this with exponential, with weighted, with many different time periods. We've always come back to the 20-period simple moving average because it does work best. And what we want to focus on when we're trading is instruments that are clearly trending one way or the other, and then we look and confirm that we have momentum on our side. How do we do that? Well, that's where that 20-period moving average comes in. And to judge momentum, what we're looking for, number one, would be price action, or the slope of the bars or the candles. So as you can see here, you have a nice slope higher, okay? And when it comes to momentum, the more significant that slope, the better. So you can have slight momentum in your favor, you can have slightly more, or you can have very, very significant momentum. And it works the same on the downside. When you've got a downward slope, the more significant that slope, the better. It means the more momentum you have on your side. It's like having a wind at your back propelling you forward. So what you want to focus on is a trend, a nice clear trend, one way or the other, and then when you start seeing a pullback in that stock, that's when you want to look for some type of reversal pattern telling you that that reversal or that retracement, is over, and that the trend is going to continue. So let me draw this out for you before I show you a few examples. For a setup to the long side, what you're looking for is that nice trend higher with momentum. In other words, that slope on that 20-period moving average needs to be higher, and then you're going to wait for the price action to pull back or at least consolidate sideways. Now, it's at this point where you are going to be looking for a bullish engulfing setup, and it's going to look something like this. What you want to see is that the candle on the right, and I should say that there's a difference between the setup and the trigger that actually gets you in the trade. Now, for the setup, what you want to see is that the body of the candle on the right completely engulfs the body of the candle on the left. So for the setup, we're not concerned about the wicks or the tails on these candles. We're only concerned with the bodies. And we need to see the body of the candle on the right that is bigger than the one on the left. They can actually be at the same level, but the one on the left cannot exceed the body of the one on the right. So once you see this, you know that you have a valid bullish engulfing setup. And what this is a reversal signal. This tells you that that pullback is over and that the trend is going to continue. Okay? The reason why the 20 is so effective is, number one, it pretty much draws that slope in for you. But during times of a retracement or pullback here, if the 20 maintains its slope, it helps you clearly identify that this retracement is temporary before a continuation of that trend. So as you can see in here, right in here, we had that bullish engulfing setup. Can everyone see that? Let me zoom in a little for you here. So you have a nice strong trend in place. You get a temporary pullback. Look at the slope of that 20 throughout that trend, completely maintained. And then right in here, you see the much bigger green body completely engulf the much smaller body. And then what you wait for, your trigger into the trade would be a trade, one tick or 1 penny above the absolute high of that engulfing bar. Now, you want to look at the absolute high, so including the wick. So in this example here, you want to look for a break right there, right above the high of that bar. Once you get it, you go long, and you can do so by buying a call option, by buying the stock, by selling a put credit spread, whatever works for you. And then your stop will go just below the absolute low of that same bar. So your risk will always be contained to the range of that one bar. Okay? The other thing you'll notice is that most trades that trigger tend to move in your favor immediately because of that momentum that's in place, and that's crucial. Number one, it's going to help you manage that trade. Okay, remember, how you manage that trade is everything. Execution is everything, and if it goes in your way immediately, it'll just help you remain calmer and be able to remain in that trade a little longer. But also, how many of you here trade options? If you do, you'll know that if you get into an option position and it automatically starts moving against you, for you to make back that loss in premium, you're going to require a much greater move to the upside than you originally would have needed. So having it move in your direction is crucial. Okay. Now, same thing goes to the downside. Let's look at a couple of other examples here. Okay. First of all, let's look at ATVI, Activision, and again, you want something that's clearly trending. Now, if we look at ATVI here right now, when we first pull up a chart, you're going to look to your far right. What do we have? A clear trend in place? Yes or no? I'd say yes, we do. Do we have momentum on our side? In other words, slope? Yes, we do. So this is something that you would put on your watch list and wait for a pullback, and then look for that bullish engulfing setup. Okay? If you're looking for a short trade, you would look for the exact same situation in the opposite direction. In other words, you'd be looking for a slope lower, then a retracement or pullback, and it's in this area that you'd be looking for a bearish engulfing setup that would look something like this. Now it's going to look identical to the bullish. In other words, the body of the candle on the right completely engulfs the body of the candle to the left. The difference is, for a short trade, you want your engulfing bar here to close near its lows of that session. Okay? The closer it closes to its lows, the stronger that move to the downside is going to be. And for the long trade, you want this candle to close near its high. So for a bullish engulfing setup, excuse me, you want this candle here to be green. For a bearish engulfing setup, you want it to be red. In either case, it clearly tells you that that reversal or that retracement is over and that continuation of that move is going to continue. Okay, a couple of important rules now. You can see here you had this move lower, and then we experienced a pullback. And then right in here was a big bearish engulfing setup. Right here, you see the big red candle completely engulfs the smaller green candle. Now, when it comes to selecting trades, you want to always assess the risk. When you have a large candle such as this, remember your stop is going at the other end of that candle. So you're looking for a breach of the low to get in, and your stop is going on the other end of that candle. If you have a very wide range candle, that means you're taking a lot of risk. If it's a smaller candle, like look at this setup here to the long side, right in here. Okay? Actually, let me redraw that for you. Right in here. There. So you see you have a nice upward swing, you have a pullback, there's your bullish engulfing setup, and off it goes. But look at the range of this one candle. That would be your risk compared to this, much different. So you want to select the ones that have small risk, because your overall, in the long run, your formula for success is to not only have more winners than losers, but to make sure your winners are greater than your losers. So capping your risk like that is great. But I do need to remind you before I move on to the other strategy here, that a couple key rules. Number one, when you've spotted that setup and you're waiting for that trade above the high for a long or below the low for a short, you want to make sure that this instrument does not trade below the low of this bar. If it does so first, before ever trading above the high, then that trade is disqualified. Okay. Also, if two more bars close and we still have not reached that high, we disqualify that. Why? Obviously, the momentum isn't as strong as we initially thought. Okay. For the short trade, you're waiting for a trade below the low. If it trades above the high first, you disqualify it. If 2 more bars close, we still haven't traded below the low, you disqualify it. Okay? That in a nutshell is our favorite trade setup. Now, next is our winning momentum strategy. Now this one, we've added a couple of indicators to this. Let me show you. Here, what you're seeing is the 20-period simple moving average, same moving average we had before, and we are still going to use that to judge momentum in the same way. But here, this shaded area, this is a stripped-down version of the Ichimoku Cloud indicator, which is generally used as a strategy in itself and comes with several different other lines here, other moving averages. Well, we've stripped those off and we've kept the cloud portion of this indicator with the default settings, by the way, default settings of 9 and 26. Here, we're going to use that to identify trend, which I'll explain in a second. And down below here is the RSI, or the Relative Strength Index. And as I hover over it, you'll see that it's actually a 7-period RSI based on the close. Now, on most charting platforms, the default setting is 14. We cut that in half because we want a much more responsive RSI. Also, this indicator is usually used to identify extreme areas of overbought and oversold conditions. So they will generally have lines drawn at the 70 and the 30 levels. Well, we remove those and we put one right down the middle at the 50 level. We're going to actually use this to identify our setup candle. And this is how it works. So, Rosa, yes, this is a daily chart, but again, this works on any time frame. If we have time near the end, I will show you several examples on different time frames, okay? Now, when you first bring up a chart, you're looking at the far right. And to judge trend using this system, what you want to do is make sure that the candles and the moving averages and the moving average are clearly on one side of the cloud or the other. So in this case, they're both above the cloud, which is what we consider an uptrend. When they're both below the cloud, that is a downtrend. And if one or both are overlapping the cloud, that's a consolidating market that we do not want to trade with using this system, okay? So in a split second, we can tell that, hey, we're in an uptrend. Also, in a split second, we can tell that we have momentum on our side based on the slope of that 20. Now, when we do that, once we've identified that, we then put this instrument on our watch list and we wait for a pullback. And what we're looking for is for the RSI here to come back below that 50 line, or at least come back and touch that 50 line, and then turn back upwards and cross back above 50. When it does, that would be our setup candle. So looking back in here, as you can see here, when we made this move higher, we pulled back here, and you can see the RSI here that moved back to that 50 line or just below it, and then crossed back above right here. So when it crossed back above, it's on that candle that we would consider our setup candle. Now, if you look at this, there's actually also a bullish engulfing setup. So both systems would have set up at the same time here, okay? And look what happened next. Boom, nice move higher, okay? Now, once you identify that setup candle here, which is actually the darker green candle here, you follow the same rules as the other system. In other words, you're waiting for a trade above the high of that bar. If you get it, you go long, but this time your stop will go under the most recent low. Not under the same candle, but the most recent low, which is usually 1 or 2 candles behind. So it's usually very tight anyway. But once again, if you get a trade below the low of that bar first, well then you disqualify that trade. If 2 more candles close and you still haven't breached that high, you also disqualify that trade, okay? Now, to the downside, same thing. Once you have candles and moving average below the cloud, you know you're in a downtrend. If you have a downward slope in the 20, you have downward momentum. So you then turn your attention to the RSI. And once you see that RSI come back to that 50 line or just above it, and then turn back lower, that will, during that cross back to the downside, that would be your setup candle. Okay, let's look at this here, right in here. Okay, now this candle here, the red candle associated with this cross, wasn't quite, I mean, it closed below that cloud, which is what's important. You got to be below that cloud. And then you wait for a trade below the low of that candle. You get it, you go short, stop goes just above the most recent high, and then it's just a matter of managing that trade. Let's look at another example here quickly before we get to the next strategy. And there's another one, another very, very important thing that you need to remember with this strategy. How do you know when an extended move in one direction or the other is about to happen? Well, there's a clear telltale sign with this system, and that is when you get a cross from one side of the cloud to the other with a slope on that 20-period moving average, that usually tells you that there's going to be an extended move in that direction. So if we look back here, you know, the stock was pulling lower and then suddenly crossed from one side of the cloud to the other with a slope, and look at what happened overall. And then, so if you build a watch list of instruments that have just crossed that cloud with momentum, one way or the other, it really doesn't matter, okay? Then it's just a matter of keeping an eye on the RSI on these pullbacks and waiting for those crosses. What you need to make sure of is that when it does cross, that you still have that slope in your favor. So if you look back in here in September when it crossed above, you can see that 20-period moving average was actually pointing lower. It was not sloping higher. So that's one trade you would not have wanted to take. Even though it worked out, you don't want to take it because that's not what we consider a high probability setup. But once it regains momentum, like it did back in here, every one of these pullbacks, you can see were clear entry points, and every single one would have been a profitable trade. Okay? Doesn't mean you're going to be 100% accurate with this system, but the majority of the trades should be winners, and the key, just like the other one, is that your winners should be much greater than your losers. Okay? So very straightforward. Keep an eye on those crosses here. Let me show you another quick example if I can before we move on. Here's Bonanza Creek. This is an energy play we've been talking about recently with our members. And you can see, and if we look back here, look at what gave us a heads up here to this move lower that was about to happen. Okay? Came through that cloud with momentum, with that slope lower, and look at what happened next. So once that happens, you just keep an eye on the RSI, and as it comes up and crosses, like it did up in here, that is your entry, and off it goes, okay? Being asked to zoom in a little here, I'll do so from now on. Thank you. So, that is our winning momentum strategy. One more for you, which is our powerful Veracity system. And let me switch over to that. Now, we've actually had Metastock program all of these strategies into their platform. The Veracity system is one that is a proprietary strategy, and we don't reveal our method behind it. But what you're looking at here is the actual indicator that's programmed into Metastock. And let me explain what you're seeing here. These little diamonds, there's times where you'll see a red diamond and a time where you'll see a green diamond. That identifies the actual setup candle. This strategy has several indicators behind it and is one of the more accurate systems you'll find. And what it's really meant to do is capture the bigger moves. Now, what you're seeing here, I've zoomed in for you a little so you can see it. The diamonds are what we would call the setup candle. And then whenever the trade actually triggers, meaning it's time to either short or go long, you will see the arrow. So the red triangles and red arrows are there for a short trade, and the green diamonds and green arrows mean a long trade. Okay? Now, whenever you're in a trade, the system will paint all the candles that color for you to be able to follow along, and you'll quickly know when you're out of that trade because it will also flag you with an exit little flag like in here. Okay, so also based on trend and momentum, but it's meant to capture the bigger moves. Works great on all time frames. Here's a chart of the United States Natural Gas Fund, and you can see that during this downtrend it caught pretty much that whole move here. Now the reason we designed it this way is to not only identify some great entry opportunities, but help you remain disciplined and remain in that trade for the bulk of that move. Okay, and it's meant to get you out as soon as it starts going against you. Okay, or as soon as the system identifies that there's a possible chance that this is going to retrace on you. But if it does so, and then sees another entry, it'll identify it for you immediately like it did here. So you can see that UNG throughout here had several nice trades to the downside, and recently has set up once again. That was on May 19th, was the entry to the short side there. Let's look at a few more here, and I'm also going to try to fit in some different time frames, different instruments. Here's a chart of 3M. Again, it's meant to capture the bigger moves, so you'll notice that when it turns here, number one, it gets you out quickly when it turns, but number two, you know, as soon as it confirms that yes, that is a new change in direction, it gets you in, and it helps you stay in there by coloring all those bars the same color, and then gives you that exit sign when it's time to exit. Now, in this, you know, you don't want to take every single arrow. That's not the goal here. You want to focus on the ones that have trend in place, strong momentum on your side, and there's other patterns here that we teach in our pro class to help you identify which one of these arrows you should take and which one you shouldn't. Even following them all, you do very well, but there's some specific ones you want to focus on to really increase your accuracy with this. Let's look at the SPYs, and we'll look at them on different time frames here. The SPYs, there's a couple things you can do now. This strategy, you can see, gets you in and keeps you in for some of those bigger moves. But more importantly, when you're dealing with an index chart like the SPY, you can actually use it to help you identify major shifts in the market. So if we go to the monthly time frame, all right, look at the spiders here. From late 2004 up until 2008, before that collapse happened in 2008, there's that bull market, okay? And it got you in and kept you in and got you out, more importantly, before that collapse. Now, it wants to confirm that move, so you know it didn't capture the full move to the downside, but caught a good portion of it. But then most recently here, in mid-2012, it identified a new bull market, and we were in until about August of this past year, okay? Recently here, again, it's flagged some upside here, and the market has moved higher since. So you can use the monthly chart on the index to judge overall market direction and then move to the lower time frames to actually pick off some trades. Okay, I'll show you a few other charts. For those of you who are investing longer term, how many of you are managing a retirement account or hold stocks, dividend paying stocks, for example? Using the Veracity system on the longer time frame it works incredibly well. You can see here on Nike, since late 2012, pretty much the full over that bull market had us in Nike here. So imagine holding this and collecting dividends throughout, maybe selling some covered calls along the way. Just recently exited this trade. And how many of you trade futures? Let's look at futures. Let's look at gold. You know, it's been on quite the run lately. It's been very volatile. Let's have a look at it. You can see right back here, it identified in early 2004 and pretty much kept us in for that full move up here right before it turned, got us out, and in 2014, this identified a short position, which it also actually got us out here earlier this year. So very, very interesting. Mike's saying, will it work intraday? Yes, absolutely it will. Let's have a look at some of those. How many of you trade Forex? Let's look at a Forex pair. Here's the USD CAD pair. Now this is the monthly chart, okay? Don't know many people who trade them on a monthly, but you can see just how well it works. But let's go intraday. Let's see. Let's look at maybe a 5-minute or a 15-minute. So it all depends on how much volume there is on that chart, how much it moves. Here's the 5-minute recently. It's got a couple of moves, but let's look at the 50-minute. My favorite intraday time frames for these strategies are the 15-minute and the hourly, especially if you're trading stocks over $100 on the hourly, works extremely well. But here's that USD CAD pair on the 15-minute time frame, and you can see that once there's trend and momentum on your side, it just picks off those entries very, very nicely. Okay, so it works really, really well, all time frames, any market, and when you get setups from the different signals happening at the same time, those are even more powerful. Okay, now the question is, really, we know this works well for us. We've been using these for many, many years. The question is, how do you get this working for you? Well, we've put together an incredible package for you today. What we've done here is in our membership, our pro membership, we're going to identify for you, share with you our trade ideas on all three systems: our favorite trade setup, our winning momentum strategy, and our Veracity system. And we do so in our nightly videos. We send out nightly videos 5 times a week, every Sunday to Thursday, where we not only show you the trade ideas that we're looking at, but explain why and with which strategy, and cover in detail our outlook for that stock along with the markets. Also, twice weekly, you get to come into our room and join us for a live market chat. We actually had one this morning, just before this session. They happen every Monday evening at 8 p.m. Eastern and Thursday mornings, 10 a.m. Eastern. We're actually having one on Monday, even though it's a holiday. We will have that, so you can join us then for the next one. You get to come into our room, ask me any trading-related question you like. There's some great sessions. And also, those are recorded and put into your own private video library. But in addition to that, you get to access all our educational videos, which we've been recording over the years. There's hundreds and hundreds of hours of video that you get to go back to and learn from. And with this membership, you'll receive invitations to our exclusive training sessions, as well as get discounts on other educational products. The link for this is tradingwins.com/trial, and this will give you a 30-day membership to our pro service, all for just $27. Just click on the green button at the bottom. Now, I do see that there are many questions here. I'm just going to ask our coaching coordinator, Raul, to come in and join us so he can read off some of those questions, and we can get through as many of them as we can in the time we have left. I'm just going to flip over the mic here so you can hear him as well. Give me just a second to do that. We will put that link in the chat box, so you can just click it from there. Again, it's tradingwins.com/trial, and you get to join us for a full 30 days. Raul?
It's a popular question always is there a phone number where you can be reached to place your order? Yes, there is. It's 1-888-574-2426, and a real live human being will answer your phone and be happy to take your order. This is the same package that's on our store for $97 a month. It's not a stripped-down version. It's not a trial version.
No, you get everything that's included. Absolutely. We just wanted to, give you an opportunity to see what we do here.
Now, part of your Veracity system, part of the question that comes up is, do you do entries and exits? Exits are very important.
Yeah,
talk a little bit about that.
Absolutely. We do, as you can see on the charts, and I'll bring it back up for you here. There are the exit flags, like in here. If I can hear, let me zoom in. right in here, these little red exit flags. Actually, there's a lot more to this. I just didn't have time to display it all, but there's what we call our expert commentary, which we can attach to this chart, which actually gives a description all the way through the trade of what you should be doing, you know, your price levels for your targets, for your stops, how to trade this with options, all of that, which is another key thing. During those nightly videos when I profile the trade ideas, I cover which options that we would trade with that. So for all of you option traders, we share that with you as well in those videos.
Charles is asking if you can go back to that offer page just so you can see the detail. Charles, we'll
Sure.
get that up for you. I wanted to ask you, when you're profiling trades, and that's a key word here, you're not just saying do this, do this. You take great pride in explaining why you're looking at a certain trade and what options you can be looking at, what exit strategies you can be looking at.
And that's right. And not only that, in the days ahead, we follow that. So every night in the videos, we go over our open positions, and you know, we relook to see if there's any adjustments we need to do, if we want to start scaling out, or if we should exit, what the future looks like for that particular trade. So we'll continue to monitor it all the way through. The whole idea of those videos is as an educational tool. So not only do you get to see what we're doing and how we're trading this and get trade ideas, but those live weekly chats are additional training. You can ask us any trading related question you like. I'm there to help you become a better trader. So anything that you're struggling with, come to those sessions, ask the questions, and we'll help you.
Everyone loves trading options. How much of the training and education that people get, or how many of the trade alerts that people get involve options?
Just about every single one of the trade ideas involves options. As long as they're, well, we usually focus on optionable instruments because I almost exclusively trade options. So just about every single setup, excuse me, will have an option associated with it. We also do look at Forex, some futures, and again, these strategies, regardless of whether you prefer to trade intraday or invest for the long term or swing trade on daily charts, they work exactly the same. No need to change the rules or the indicators. It's just switching time frames. They work very well.
Now, $27 is not a lot of money, but despite that, you always feel like you have to give at least 10 times the value of what people are paying for this, and I certainly think you're doing that with this offer here. When people join you for your market chats, what kind of questions can they ask you?
They can bring certain trade ideas that they're looking at and ask me to bring up the chart and have a look at that for them. It could be something, you know, like for example, they might be struggling with an exit. They may be getting scared out of a trade too early and want some help with that, and I can suggest certain things. From time to time, we'll look at different charting patterns or different topics relevant to the current state of the market that we'll cover. Really, it's all based around helping you become a better trader. And the nice part is, a real benefit is that we have so many members with different trading backgrounds, different levels of experience, that usually the questions that are asked end up turning into a great learning opportunity for everybody.
What's the biggest challenge that you see with your coaching students in today's market, and how does this pro service help you overcome that challenge?
You know, the greatest challenge I've seen recently is all the volatility and all the back and forth and uncertainty of the market has put a lot of fear into a lot of traders. So I'll help hold your hand through the process. You know, I've been doing this a long time. Don't forget, I've been doing this for 30 years. So I've seen markets like this many, many times, and I'll help guide you through it. Mike was asking the question about you know, the 30 days of membership here. This is all not just to give you exposure to what we do and our trade ideas, but really help you become a better trader by the end of those 30 days. And hopefully, obviously, we hope you stay with us a lot longer. But we wanted to make it a no-brainer for you at $27, help and do something special for our friends at Investor Inspiration, because they've been such great partners of ours.
Our time is almost up. Just a couple of other questions. This one always comes up. With any trading service, is it right for me in terms of my account size? Who is this appropriate for?
Well, I mean, it will be suitable for anyone, but if you're thinking you need a lot of money for it, you don't. Whether you're buying just one option contract for a couple of $100 or, you know, a single share, it really doesn't matter. The whole point is to help you grow your account slowly and steadily. And that's really the key here, is help you become a better trader. So you definitely do not need a lot of money to do this.
Len was asking what time do the videos come out?
It's usually, you know, somewhere between 5 or 7 p.m. Eastern. It's shortly after the market close, and they do so every Sunday to Thursday.
Phil was saying, I'm a day trader. Will these strategies work for me? Can I use your trading alerts for my day trading?
Yes. Now, our trade ideas that we share in the videos are usually based on the daily, the weekly, or the monthly time frames, but the strategies work very well on the smaller time frames as well. So you can certainly, we have many members trading the S&P E-minis on the 5-minute, the 15-minute, the hourly, so they work across the board.
I'll let you recap the offer one more time before we sign off.
Sure. So again, this is a full 30 days of our pro membership that will include trade ideas from our favorite trade setup, our winning momentum strategy, and our Veracity system. Twice a week you get to come into our live chat room and join us live, ask me any trading related question you like. You will also have access to all the educational videos archived on our website and receive invitations to other training sessions as well as discounts on our educational products, all for just $27. The link, again, is tradingwins.com/trial.